Good morning and welcome to the Thursday morning market wrap. It's been a big night for markets overnight with US dollar having a golden cross, stocks lower again, and the overall sentiment of risk going off a little bit. Interestingly, and because of the US dollar, however, what we've seen is we have seen that the Aussie dollar and sterling and euro and gold have all rallied. So that for me is a sea change or a potential sea change in what's happened in markets. Now, of course, what's driving this change is changed sentiment about the Federal Reserve and also the US economy. Yesterday, we saw CPI and PPI data in China. And what we saw was CPI came in at 1.6%. Now, that's a big drop from the 2% that we saw last month, and it undershot the 1.8% the market was expecting. So consumer prices in China are starting to fall. Producer prices accelerated their decline. They're already in deflation. I think they were down something like 5.7%. That's not a strong economy. That's not an economy where producers or retailers have a lot of pricing power. That tells me, unlike Milton Friedman, I don't necessarily think inflation is everywhere and always a monetary phenomenon. I think it's about aggregate demand in the economy, below a certain threshold anyway. But what I would say is that tells you that aggregate demand in China is coming back and falling from where it was previously relative to where the economy is now. Likewise, in the United States last night, we saw that PPI fell 0.5, which took the year-on-year rate, that was last month, which took the year-on-year rate to negative 1.1. CPI is out tonight, so that's going to be huge. But again, producer prices are not strong. They're falling. Something's going on in the economy. Aggregate demand is not that strong. And of course, we saw retail sales come out on the weaker side at 0.1 instead of 0.2. And so we saw that on the weaker side. So what that's done is it's pushed expectations. It certainly wiped October. No chance of an October hike unless the Fed really wants to blow all the markets up. And it's really starting to push any chance of a rate hike further into 2016. Not even the first or second meeting, but we're talking about much further. The Fed has in many ways missed a great opportunity here by not moving in September. You could argue, of course, that they've done the right thing by waiting. But if the US economy does start to slow and we end up with rates at zero, it's going to be one heck of a miracle if the Fed can sustainably lift the economy back onto its feet when the next recession comes, if they've got rates at zero. Anyway, let's have a look at the US dollar index. The US dollar index last night, excuse me, I'll just blow this chart up. Right. So this is from my Reuters screen. I'm trialing I'm trialing it on my desktop now rather than my laptop with a screen attached because I've been told that some of the mic quality isn't that great when I'm running everything on the one machine. So I'll try it this machine. But what you can see is that the golden cross back here in July 2014, back when dollar index was in the sort of the 79.80 region, that's given way to a death cross here today with the fall. So that's a big fall last night. Now, of course, we haven't taken out the August low, but what we have got is we've got you're probably going to see the same sort of pattern in the S&P. Certainly this was the pattern we saw in gold a few years back before it's fallen all the way to where it is now. It's strange to be bearish, the US dollar. It's incredibly strange to be bearish, the US dollar, but the technicals are the technicals. I'm not going to get overly concerned unless we, sort of take out this region here. But when you do see these big moves, these big death crosses, if you want to call it that, you do have to note them. And the reason you have to note them is because everyone else is going to be looking at them as well. Now, if I look at my own, indicators of what's going on in terms of the dollar index, it's been, going sideways and there's no clear trend. again, last night's move put a downside bias, and you'll note that last night's move is lower than the fall a month ago. So the question is, what's going to rescue the US dollar? High CPI tonight might do it, but we really do have to think about the fact that between now and the next non-farm payrolls, it could be reasonable to expect that the US dollar is going to go through this period of weakness. Now, from a euro point of view, what we've got is that the euro, and I haven't got a chart over there, but the euro's broken back up through the September high, and also the old trend line that the head and shoulders move that we saw a month or so back. So the euro's looking better. And then, of course, gold. Gold, if we have a look at gold, I'll show you the gold chart. Now, this is the weekly, and obviously the daily would be slightly better. But I wanted to do this because I wanted to put this in context. So let's think about gold. Why the heck would anybody buy gold? It's a precious metal. It didn't react in August well. In fact, it went down when it should have gone up a couple of times, those kind of things. But think about it. If out of the money options on the CBOE VIX index and other stocks are expensive at the moment, people are worried about uncertainty and worried about the risk in the market. What do you do when you're worried? What's the easiest hedge when you're worried about risk and uncertainty in the market? You buy gold. That's the way it's always worked, used to work. That's the way it's working in dollar yen again now, 118.80. I still think it's going to 116.50. So what we've got is we've got this break, and we've had a nice little break here. So we had support, 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 back down through, test, rejection, back up towards, rejected. So what you'd say here is there's some momentum building for this topside break. It looks to me like, you know, it's no big deal now to say, oh, you know, it might go to 1,200 because that's only another $17 or so. But it could go to 1236, 1235, something like that. Then we'll see. You know, this trend line goes back to 2013. So we'll have to wait and see how that plays out in the market. But you can see those two related moves, the US dollar move and the gold move, could potentially be a game changer. Because what happens with a weaker US dollar, if that's what's going to happen, is the downward pressure on commodities, all other things equal, stops. A stronger US dollar, because commodities are denominated in US dollars, and because they are then bought by people with other currencies, a stronger US dollar puts downward pressure on commodity prices generally. So a weaker US dollar will lift some of that weight. So is it really a surprise that we've got copper this morning at 242? I don't think so. So these are the kind of things. The US dollar is now very important. I haven't got the chart. Remember, I've been saying over the last little while that dollar Sing was the bellwether for me. The MAS announced that they were depreciating yesterday, and we had a weak print in growth for Singapore, GDP, +1 instead of negative. So they just missed a technical recession. Dollar Sing has roared. It's a relative roaring because it's dollar Sing, but it's roared. And it now looks like it's going to test a downtrend line from earlier this year. We've got it now down at 137 from, you know, sort of 139, 140 yesterday. I thought that it would hold the lows, but it's broken through. So the 200-day moving average. Oh, that was the other thing about gold last night, was that the 200-day moving average was on that trend line. So it was a double break. It was a really strong break. But what we've got here is we've got the 200-day moving average and the trend line roughly coincident at 136.60. So if dollar Sing can rally, and if other emerging markets can rally, and if the Aussie dollar can climb back to 73 cents and euros closing in on 115, then the game's changing. Now, that doesn't necessarily make it any easier for stocks, because as we saw with Walmart yesterday, you know, stocks are starting to struggle. And as Henry Blodgett mentioned this morning in a tweet, some of the earnings results we're seeing are on lower revenues, which is not really what people want to see, because that's how we've seen, profit growth sustained for the last few years. So it's getting to the point now where we might see more stocks down. We might see US dollar weakness. We're definitely going to see, I think, I'm continuing to say we're going to see dollar yen down at 116.50. Euro, I need to recalibrate my expectations. Sterling bounced back really nicely. I have to have a look at my copper charts and see what I think there. And gold, I've said it can probably rally another $20 at least to maybe 40 to 50 before it runs into issues. Now, of course, today's Labour Force Day in Australia. It's going to be huge. Don't mind the fact that the ex-head statistician from the Australian Bureau of Statistics is out in the AFR today ragging the survey and saying that it's useless. We know that. We can only deal with the data we're given. And so to that extent, I look at the total number of people employed rather than any month-to-month move. I know the market likes to trade on those, and I know that the Aussie will react if it's, plus 20,000 or flat or minus 5,000, we'll get a move. But realistically, 1 month or another is not that important. As I said, I stopped trading the labour force data, or in punting them and guessing what I thought the data would be back in 1990 odd, around there, because the data is so volatile. But watch out for that today. It's a big one. Other than that, we're still waiting on the Chinese loans data and M2. Japan's got industrial production tonight. It's really just a raft. We've got three Fed speakers, Bullard, Dudley, and Mester. We've got, for oil traders, we've got the EIA storage results, and we've got non-farm payrolls and a couple of Fed bank indices. So it's not really a huge day, but still some things to be careful of. So have a great day today. Watch your charts. We've seen some breaks. Whether they're one-day wonders, I would expect gold on a daily basis to come back and retest before it goes higher, by the way. We have seen some big moves. It's a potential game changer. We won't know or have that confirmed for a couple of days. But dollar index and or euro, if you want to think of it in those terms, for me are the key ones to watch. So have a great day, good trading, and I'll catch you tomorrow morning. I'm Greg McKenna. You can find me on Twitter at Gregory McKenna. You can always find me at Business Insider, and you can find me at my own website, gregmckenna.com.au. Have a great day, and bye for now.